Let's get across the overnight market action, and Peter Mcguire from XM joins me. Thanks so much for being there. So China's property market been in the doldrums for some time now. What are the latest figures, Peter?
Well, good morning, Sue. It's certainly not good when we're looking as far as in a 3-year window. Barclays have come out and said that the property market has really evaporated or destroyed 18 trillion with a T trillion dollars worth of value for the residential property market in the last 3 years. Home sales are down greater than 50% in that 3-year window, and that really is causing much concern. And how does China deal its way out? I think that's the storyline. So it's going to be very fascinating for 25.
So do you expect, there's lots of talk of stimulus. We've seen piecemeal stimulus attempts by the Chinese government. But if there's too much stimulus, that could, of course, create an overheated property market, which is the source of many of the problems now.
Absolutely. That's the issue. I mean, they're in a deflationary death spiral in a lot of ways. Have they entered a recession? How do they manage their way out? And who's holding the debt, with 180 international banks holding the debt and 120 domestic? So this is, in a lot of ways, you could debate it with, if you had 10 PhDs together, econometricians, and one side of the argument was, is inflation worse than deflation or deflation worse than inflation? I think it'd be a very interesting argument, and that seems to be the point at the moment, how they're going to work their way through that, and that's going to be, yes, again, quite concerning.
Well, let's turn to currency moves now. Lots of volatility over the past month,
Yes.
especially for the euro and the US dollar.
Absolutely. When we're looking at that, it's been quite enormous as far as that US dollar push up, Sue. Nearly at hit 109.50 about Thursday last week. It's back at around that 108 sort of handle, 108.50. And when you're thinking of what it's performed like against the likes of euro and yen, you've got yen nearly sitting at 160. You've got the euro approaching that parity at about 103. So there's talk that you could see parity or sub-parity over the next matter of weeks. And as that builds, does the US dollar, considering where they're going with rate cuts, as a 2, 1 or 0 for the Fed, and then you've got stickier than expected inflation coming out of Eurozone. So what do you see there in the sense of cuts? Are they looking at 110 basis points, or is it going to be dialed back to 100? There's the chart. That tells the story to the viewers, and 10 being the highest as far as volatility in the last 30 days, Sue.
Well, where do you see the US dollar going, especially with the new administration and the new President-elect Trump being inaugurated soon?
Well, he's very pro-US dollar, and he wants that to remain as the benchmark and the number one currency in the world. So I'm expecting the US dollar to appreciate, and probably further than there, we might see a 110 handle for the US dollar index. So a leg up over the next couple of weeks, and where that rolls for the rest of Q1. It's very hard you've got tariffs being introduced, you've got unorthodoxy going to be the new norm, and this is all going to be an interesting component of work again through to see what impact it has to market volatility and sentiment. So yeah, expect plenty of surprises with President Trump with his hands glued to the wheel.
Yeah, certainly. I've heard more interesting comments overnight, especially in regards to Greenland. Let's have a look at our other currencies now, including the outlook for the yen, the euro and the Aussie.
Well, we look at the yen, it's an interesting one. Do we see a 25 basis point hike for the Bank of Japan? We're waiting on Governor Ueda to cast his, I suppose his vote and his decision, the 24th of January. Now, I don't expect there to be any intervention from the Bank of Japan, even if it went to 160 or 161 between now and the 24th, due to quite possibly a 25 basis point hike. As far as the Aussie's concerned, it seems to be a race to the bottom. We're running at that 62, 63 sort of handle. Many analysts are saying, are we going to be in the high 50s anytime soon? Quite possible. And that's the story when you think of the Chinese property market. That's why I led in with that. It could be a pretty tough time for the Aussie battler.
More news overnight. The US services PMI was out. That beat expectations, but also created more worries that the Fed may not cut rates that much.
Exactly, Sue. A 54.1 beating expectation of 53.3, well up. So that's a very positive tone. And there it is there. I mean, that chart really tells us the story. Then the other side is, yes, are you going to see from a Fed Fund futures perspective, they're nearly suggesting you're going to see 2 rate cuts by the end of 25. Some analysts are saying 1, and you've also got the other camp coming in now into no rate cuts for the Fed. So we've just got to work through, again, where does President Trump see all this? What does he do? And the impact of tariffs. So, yeah, strap yourself in. It's going to be an exciting year.
And just quickly, what did we see with the job opening data?
You know, when you got an NFP on Friday, so we had October at 12,000. We had a very strong number come in December and in November, I should say. And so I'm expecting not a bad number, maybe the mid 150,000 for the non-farm payroll to be released on Friday. Again, keep eyes focused on that and the impact that has naturally to dollar.